President Biden's launched his tax plan. We've heard about it. Everyone reads about it. You know, capital gains is going to go from 20 to 39.6. So corporate tax is going to go from 21 to 28. You know, top line marginal ordinary income is going to go 39.6. And I'm not counting the additional Obamacare, which is the 3.29 or whatever the percentages that you have to pay for. What are your thoughts about what's being proposed, and what do you think will get done? And will they be able to retroactively take it back to 1/1 of 2021?
All very, very good questions, Patrick. Let's start with the capital gains tax, because I think that's the most interesting one, because it actually doesn't raise revenue. Even the liberal think tanks say, look, this doesn't raise revenue. The government accounting office says this doesn't raise revenue. And so, and yet they want to raise capital gains tax. And it's almost like it's a, you know, we've got this big call to tax the rich. Well, I think what people miss is that the rich pay all the taxes to begin with, right? I mean, they pay 80% of the taxes. The taxes aren't, 50% of the public doesn't pay tax hardly at all, right? And the other 50% is paying all of it. And most of that's being paid by the top 10%. So I think a lot of it is show. Now, the challenge with the capital gains tax, of course, there's the capital gains tax during life, which is bad enough. I mean, it's, you know, it affects markets, and there's a question, you know, can you do that? And what will the impact be? But the capital gains tax at death is actually pretty serious, because, you know, there've been some calculations that if you follow Biden's tax proposals through, somebody with $100 million estate could easily end up with $2 million. His heirs end up with $2 million. But $98 million is taken by the government between estate tax and capital gains tax. So we're talking about a massive shift in policy.
Let me say that one more time, because the audience may have not paid attention to what you just said. So somebody who has amassed $100 million of wealth, okay, with Biden's tax laws, they could potentially only transfer upon death only 2 million of that 98 to their heirs. Is that what you just said?
Correct. And 98 million would go to the government.
If his tax laws pass.
If you follow it exactly the way, I mean, these calculations have been run, and not just by me. If you follow all of his proposals through, you've got to assume that somebody with a, you know, if they have $100 million estate, they probably have, it's probably a business, right? And they probably don't have any what we call basis for that. So when they sell, if they sold that business, they pay capital gains right on $100 million. But they'd also, under what the plain language is, they'd also pay 45% estate tax. Plus you have state income taxes, right? You can't ignore state income taxes. You know, when we, you know, the Biden talks about this increase in corporate rates, like the federal rate is the only rate corporations pay, when that's far from the truth. I mean, some states charge a large portion of the taxes. So do
you mind if we do this together? I'm going to have my editors show this so they understand. Sure. I'm tracking with you. So I got $100 million. I want to sell my business. How much of that $100 million do I pay in tax? And I'm in California, let's just say, or New York, because I see what you're doing. I'm in California. So, I got a $100 million business. I sell it. How much do I pay in capital gains taxes under Biden's laws?
So in California, just California alone, you're going to pay 13.3%.
Okay. So that's 13.3 million.
Okay. Biden, you're going to pay somewhere between 39.6 million, and depending on if you end up having to pay the Obamacare tax, that's another 3.8%.
Well, so you can't avoid it. So if you're living in, I'm paying a 3.8%.
You literally could end up paying 43.4%.
So let's stay together. Let's
4% federal tax.
So at this point, you have me at 56.4 million is gone. I have 43.6 million left to my name. What else will I pay?
Right. But then you've got understand that you got a 45%, you've got, okay, so you have $3.5 million exempt. So out of that 100 million, $3.5 million isn't subject to a state tax, but 96.5 million is subject to a 45% state tax. So you take 45% of 96.5 million and add that to your number, and I think you come up with right around 98. You see if I'm close there. I think I'm pretty close.
So I take 96.5 million at right. 45%.
Correct.
I get $43 million.
Right. Add it to what you got. that you're already paying.
which is an additional 43 million. So that's 86 million. Let's just say it's a 90 million bucks right there.
No, because you've got, okay, if you got 43 million,
Yeah.
and then you've already got 56 million.
Yep. I paid 56. Oh, that's right. So it's 90. I got you now. So the 45 million plus the 56 million, that's
99 million. Just so you know, well, 43, okay, 40 plus 50 is 90, right?
that's
And if you had
$99 million.
53, right? Plus 5, that's 8, that's $98 million. So there's your 98 million.
And all of that, what you just said, could realistically happen to somebody.
It's possible. Hopefully saner minds will prevail. But if you just look at it honest black and white, hopefully you're not paying estate tax on top of income tax. You shouldn't have to, but that's kind of what the proposal looks like. So it's pretty much a confiscation of your assets when you die.
So if you like this little short clip from an interview I did, click over here to watch the entire interview. And please don't forget to subscribe to the channel. Take care, everybody. Bye-bye.